Well, we've got to remember that over the last year, or certainly over the last, 4 or 5 months or so, we've had a big move in the dollar. And perhaps this is shining a different light on cable. If we turn to look at euro sterling, we see it now, yesterday it zoomed above that 92 level. And actually, since the referendum 4.5 years ago, it hasn't spent an awful lot of time above that 90 level. So we are at very weakened levels. Now, we have been here before. We were certainly here around about August, I think, last year, and that was in the midst of the Theresa May's really troubled government. But I think right now it is looking really quite vulnerable. And if the market does decide, or if the government does decide to walk away really from any chance of a trade deal with the EU, I think we could certainly see last summer's highs in euro sterling, if not beyond. And we've got to remember that if the market begins to worry that we are going to have less investment because of political uncertainty, because of uncertainty about firms not being ready for a no-deal Brexit, then we could have a prolonged recession, or at least a more difficult recovery. And that could mean that the implication of, or the threat of negative interest rates from the Bank of England stays on the table for longer. And that's also another negative for sterling.